Hello friends, in this short video I would to talk briefly about money investments, and I would like to share with you certain ideas and insights in this regard. Uh, go by with the data, then go by with the analysis, and also look at the narrative and also the perceptions in the stock market. And when you look at India and China, India emphasizes less on manufacturing and more in services sectors, whereas China emphasize more on manufacturing and less of services. When you look at USA is number one country. It is always ahead of the game. It's money or military and whatever the area you are into. So America is still the number one. So these are all aspects I am sharing with you. And when we talk about money, so be rational, not emotional, and play the game carefully, and avoid going for short selling, because it's a very dangerous game. Even the experts, they burn their fingers by short selling. So go for long, and again, more than that, you should be an investor rather than a trader. And if you go for intra trading, then again it involves costs and expenses. So best thing is to stay invested. When you look at Warren Buffett or Charlie Munger and various other people, they invest carefully, and they do a lot of research. They are professional players, and they have used a team of researchers, and so accordingly they act. And they are very much, they are not moved by any setbacks. When you look at Warren Buffett, he invested into Apple, and he was successful, not at one go, but little by little he did it. So when you look at Warren Buffett, the main thing is that he is an investor. He is not into manufacturing. So there are lots of opportunities, and main thing is you have to be very rational, not emotional, and you must take a risk. And not to take a risk is also a risk, but you must take calculated risk. And sometimes we lose money, but again we have to learn lessons, and we have to keep moving. It's a part and parcel of stock market. And some people opine that stock market is a beauty contest. So people have different perspectives about stock market. And when you want to if you are a retail investor, and if you are doing a job 9 to 5, the best thing is to invest into mutual funds and some shares, and so that you can track periodically, maybe around once in 6 months and or a year. And if you are a professional player, and if you are not working from office, the best thing is to invest and track the research, and then track the status, and you have to update. And whenever you find the lows, you should not be worried, and you should not go excessively worried. uh, COVID was stuck, and things changed. September 11, like that, every stock market throws ups and downs. So only thing, you should be very much calculated. And in the long run, stock market gives better returns than any other sector. And so and at the same time, you should have a diversified portfolio, in the sense you can put into uh, um, equity, then a little bit debt, FD, like that. It all depends upon your risk appetite. And So these are all the aspects I am sharing with you. And I am 62 and I have my own challenges. And we are not blessed with a lot of opportunities because I am already 62. Whereas the young people are very smart and brilliant, they are tech savvy. Millennials are, I mean, why they are also known as why. Then again, the Gen Z, who are known as centennials. They are very smart and brilliant, especially Gen Z are more tech savvy, and there are lots of opportunities. And people are very ambitious, and they are young people are young people dare to dream big, and they have lots of opportunities. And if they fail also, they can bounce back because age is in their side. So young people have to try. They should explore, experiment, execute effectively. They should embrace failures. They should embrace vulnerability. They should embrace change. They should embrace technology. So these are all the aspects I am sharing with you in this video. And those who are beginners, they can go for mutual funds. Mutual funds means it's done by AMC, asset management companies, and they invest. We should invest into AMC, which are credible, and so that the money is safe, and you can go with lump sum or SIP. SIP means systematic investment. Systematic investment plan, and again systematic withdrawal plan. So like there's so many aspects, and overall I believe lump sum is better than SIP, and stock market is better than gold. Then again, ETF is better than physical gold. These are all my perspectives. It's for you to make your own decisions according to your risk appetite. And I am 62 and I am a survivor of brain stroke. I have lots of challenges. So now I am trying to explore ways and means to create opportunities to achieve financial independence. So I request you to consider subscribing to my YouTube channel and sharing with your networks. So you will find more and more videos related to money, finance. Basically, I focus on education and learning. So now slowly I am researching and exploring about money and finance. And I am basically an educator, researcher, storyteller. So lots of things I do it, and I published 55 books. I published more than 300 research papers. I published more than 1,000 articles, and I was a regular contributor for Entrepreneur magazine globally. And I still serve on the editorial boards of DLO of Emerald and JVPL of USA. So lots of things I do it. So I'm testing my waters in money and finance. So hopefully you will find more and more videos. I request you to consider subscribing to my YouTube channel and sharing with your networks with gratitude.